Hey there, welcome back to Finance Fridays. I'm your host, Lucas Bolahood with Coldwell Banker RMR Real Estate and the Bolahood Group. This is a solo episode of Finance Fridays this week, being Friday, June 23rd, as Alexandra Job from RBC is away with some family commitments today. We've got some kids' graduations going on, and I know that's this is going to be a popular time of year. It is the end of June, after all, and it is school's out for summer, and there's all those big milestone moments that obviously parents don't want to miss. So I totally understand Alex's desire to be there today, and we do extend all our congratulations to all those graduates out there here in Durham region. So today, in today's conversation or discussion, because again I'm talking with myself, I want to just go over a little bit of what's been going on here in Durham region. Following the Bank of Canada's announcement on June 7th that they were going to be increasing interest rates by a quarter basis point, we've seen a big pullback in activity among buyers here over the last couple of weeks. That being, we were in the 50 to 100 showing range for a lot of properties that were, underpricing and holding offers in Durham for quite a while, for the last 3-4 months anyway. And we've seen that shift. We're not seeing quite as many showings. We're not seeing quite as many offers either. We were in the double digits for a lot of listings, and we're back into sort of 5 or less territory, sometimes none on offer days. So buyers are taking a little bit more of a cautious approach. There may be some more buyers that are pulling back and going to sit on the fence for a little while, whether they want to see if this is going to pull prices back down, and they're going to wait for another opportunity to be in the market. We're going to wait and see on that one. But there has been a bit of a shift in the market over the last couple of weeks following that announcement from the Bank of Canada. Now, some of the conversations I'm having with clients and agents amongst their clients, as well as sort of the concerns out there, is what's this going to do to my bottom line, affordability? Can I even afford the home I'm in? Or can I afford to move at all if I've got a growing family? So what I want to do is take you through a bit of an exercise and what that means. And this 25 base point increase might actually mean for our mortgage payments. And I'll just preface this by saying, some of the information or insight that Alex was able to share is, this 25 basis point rate increase is going to probably affect us on a $13 to $15 per month basis. And that, what I should say is, it's going to, for every $100,000 of loan value we have, it's going to equate to about $13 to $15 per month on our payment. It's going to add $13 to $15 per month on our payment. So say at the even 14. So what I've actually decided to do today is take you through a bit of an exercise on how the mortgage calculation will work, and actually what it's going to cost, on a monthly basis for you to service the mortgage for these kind of properties. So we're going to look at one scenario from the average overall average sale price in May here in Durham, because we don't have those June numbers yet, of course. And we'll look at one in a high ratio mortgage and what that means for someone maybe who's a first time buyer but has some resources available to buy a home that maybe is not with a full 20% down payment, but that does has that CMHC mortgage insurance on it. So let's take a look at the numbers, and we'll be back soon. Okay, so if we're going to look at the impacts of the June 7th announcement from the Bank of Canada that they were raising rates by 0.25%, what that may mean is it's going to actually add between $13 and $15 for every $100,000 of mortgage value to your monthly payment. Now, in this example, we're going to look at a 20% down payment scenario, and we're going to assume that we've got a 30-year amortization period. We're going to be on a fixed mortgage, and we're paying it on a bi-weekly frequency here. So based on the average sale price in May here in Durham region, the average price was $988,644 to be exact. So we're going to use that for our example for a purchase price. A 20% down payment at that number is $197,000, which works out to a 80% mortgage at $790, so a little under $800,000 there. Now, with two calculations we're going to look at here. Traditional, let's say 5-year mortgage at RBC right now, they're offering 6.09%, which works out to a $2,100, almost $2,200 in your mortgage payment on a biweekly basis. But per month, that's $43.83 and 82 cents. Now, if we turn over here to a 2-year term, which, as we've discussed in the past, rates may drop towards the end of 2023 and into 24. So some people are opting for some shorter terms to try and take advantage of those rates when they come down. So this one here in a 2-year term, RBC is offering 6.54% at the moment, a 2-year term, and the payment would be just under $2,300 a month. So on a monthly basis is $4,586. Now see this text here in the blue, so I want to add in what this is going to potentially do to our payments if we factor in that increase to the Bank of Canada's rates. So the mortgage value here was $790,000, so we're going to assume here there's $800,000 in here, and we're going to take the split between 13 and 15 for a nice round $14 per 100,000. So we're going to multiply that by 8, and that should add $112 to our monthly payment, which, as you can see, works out to just under $4,500 on a 5-year term for a purchase price at $988,000. And on a 2-year term, it's going to work out to just under $4,700 a month for that $988,000 home. Now, in the second example here, I want to show you is a high ratio mortgage when we're working with a 10% down payment. Now, the Canadian Mortgage and Housing Corporation has some rules around what they will, what down payment requirements are. In this scenario, we're going to look at a semi-detached property in Oshawa, and the average price of that home was $774,000, and so just under $775,000. And the CMHC requires a home or a 10% down payment for a home between $500,000 and $1 million. So fast forward, our 10% down payment works out to $77,494 and a mortgage of $697,444. Now we look back, and we have to add in here in this situation the mortgage premium insurance for CMHC, which works out to $21,620. So our total mortgage value that we're going to be actually loaning or getting our loan from is $719,065. Now, the CMHC website and their calculator does share what the interest rate is for that $21,000 insurance portion of the loan, which is 3.1%. But in this example, they've provided us a 25-year amortization period. We're going to be on a fixed mortgage, on a 5-year term, and the RBC high ratio rate was 5.44%. So we'll use that for this example just to stay consistent. Now that works out to a monthly payment, bi-weekly payment of $2,011, or on a monthly basis is a little over $4,000. So when we look at that blue text again, talking about what's going to happen with the Bank of Canada. So we're going to take that $14 per 100,000, multiply it by 7, because we've got a mortgage of $719,000, which works out to $98 a month to our payment. So just over $4,100 per month if you're going to acquire a property with an insured mortgage, or at least one between $500,000 and $1 million. Moving on here, just in quick summary today, let's get our zoom in here. There we go. So just in summary, as a result of that 0.25% increase to the policy rates by the Bank of Canada, you're going to add approximately $13 to $15 per month on your mortgage payment for every $100,000 of loan or money that you owe on your home, mortgage value, I should say. Now, remember, you also have to include your property taxes when you're calculating these monthly carrying costs. So if you have annual property taxes at $6,000 a year, divide that total by 12, and you're going to determine what your monthly property tax obligations are. So based on that $6,000 example, it's about $500 a month that we've got to add on to our monthly carrying costs of the property. So with that, you'll find our contact information at the end of this video. Feel free to like, subscribe, and leave a comment, or contact us directly with any of your questions about today's topic and how maybe we can help solve any of your real estate needs. And until next time, bye for now.